5 tiers of the deal, okay? Now, when you write an offer or you purchase a property, your first exit strategy should be to wholesale it. Now, seasoned veterans, you guys know that we always want to wholesale every deal, whether we're buying it for flipping it as a wholesale, whether we think we're going to buy it for cash flow, we always wholesale it first. Now, here's a prime example. On Friday last week, I closed on a fourplex. And as a standalone asset, it's a great investment. We've got $1,500 a month in each unit, so we're bringing in $6,000 over the 4. We picked it up for $645,000, so we're safely in the rule of 1%, and that thing's going to cash flow, if we kept it, for $1,800 to $2,200 a month, which for most, that's really good cash flow. However, I'm listing it, what's today, Monday? So we're going live with that thing on MLS on Wednesday of this week for $899.9. Well, Lee, that seems high. Why $899.9? Because if I don't get it, I don't care, okay? Now, I also try to always follow the advice that I share with you guys. Wholesale it first. Because think about it in these terms. I paid $645 for it. If we sell it for $900, that's a $265,000, $255,000 profit, all right? Now, let's call it $2,000 a month in rent. That's pretty good. But it's going to take me 12 months to make $24,000, and it's going to take me about 10 years to make $220,000. So I can generate the same income in a matter of weeks that it would take me 10 years if I keep it as a rental. Now, understand that tonight's presentation is about buying cash flowing properties and holding them for rent because we need the consistency of income. I mean, today is May the 2nd. I always like the first of the month because a whole bunch of people now have to pay their rent all over again. And the nice thing about buying cash flowing real estate is I do the work today and I get paid every month moving forward. But many of you know our rule, okay? Goal number 1, I want you all to have $250,000 in cash. So unless you have $250,000 in cash, we want to be careful about simply buying to hold. And we want to be mindful of the strategy of wholesaling, wholetailing, retailing, and then renting if we can't get those first 3. Because wholesaling, wholetailing, and retailing, guys, is the fastest path to get to that first goal of $250,000 in cash. Now, many of you know goal number 2. Goal number 2 is $1 million in investable assets, excluding home equity in your primary residence. Now, there are a handful of you here that are already an accredited investor, which means you've got $1 million in investable assets, excluding the equity in your primary residence, and you're doing pretty well financially. But you're probably getting killed in taxes. Now, I don't know about you guys, but April 15th sucked big time because I had to pay a fortune in taxes. Why? Well, if you make a lot of money, you're going to pay a lot of money in tax. But we can offset and eliminate a lot of that tax burden by owning rentals, real property, where we get cash flow, but we also get appreciation, depreciation, and cash flow. Okay, and a lot of that we can write off. So some of you are in that place where you need to have a more balanced, blended portfolio where we don't want to be flipping all the time because it creates this massive tax burden, and we need to be looking at buying and holding for the tax benefits and the cash flow. Now, you may not realize the full potential of the profit as you would if you fix and retailed it, but you can begin building your liquid capital faster, which will eventually allow you to fix and flip multiple properties and truly build up your wealth in the future. If you can't wholesale it, you fix and retail it. If you can't retail it, you lease option. If you can't lease option it, you hold it and you rent it. Now, this approach allows you multiple exit strategies, so regardless of where you end up, you're going to make money.